All righty. Good morning, everybody. Happy Friday. TGIF Friday. Get positioned in my seat over here. Get my screen turned on over here to my right. Make sure it's sounding good. It is sounding good. All right. So we're up and running. Well, good morning. So what we got going on today, boys and girls? I think I'll start out by kind of talking a little bit about yesterday. So I ended up closing my Aussie dollar long position for a small profit. That demand zone I was hoping would bounce to keep it afloat didn't quite work out. And so, yeah, I ended up taking away quite a bit of the unrealized gains that I had. But hey, a win is a win, right? Sometimes you got to give these things a chance to, let me get my screen shared. You got to give these things a chance to, work themselves out, even on little pullbacks. So, yeah, it just didn't, just decided not to run like I wanted it to. But anyway, let's go have a look. So that was Aussie dollar. Let's go find that real quick. And then we'll get into the economic calendar. We'll take a look today at some put to call ratios to see where some of these indices, Bitcoin, things of that nature are pointing. As a result of the options market, their puts and their calls, that's a really good contrarian signal, much like the retail sentiment is, much like the COT report is. Okay. COT, obviously, we want to follow, but when it comes to things like retail sentiment and put to call ratios, we want to observe the masses and do the opposite, right? Since that's a contrarian signal, since most traders lose money, right? They're usually on the wrong side of the trade. So we'll take a look at that. A little bit of a preview of the of the COT report, because it'll be out later this afternoon, late afternoon, I should say. And it'll be updated as of Tuesday, of course. Remember, that report's always, when it comes out, it's accurate as of 3 days prior. So this Tuesday that we just had, those numbers will be accurate as of that day. So that's the smart money. Those are the big banks on Wall Street, the firms, hedge funds, all that kind of thing. Really important metric I like to follow to ride their coattails, jump aboard the wagon, so to speak. So, but anyway, yeah, when it came to the Aussie dollar position, if we kind of recap this thing, let me turn off my ribbon here. Okay, it started off with this daily demand zone, which is this light yellow. I just, anytime I have a zone that gets hit, I always try to lighten the color just so I know it's been touched. And then right here is my 4-hour demand zone that was within it. So just a recap, I bought in down here when we had a sharp 15-minute, very bullish candle. It was basically a tombstone candle. It was a what do you want to call it? Some call it the tombstone, I guess. So yeah, we got that entry down. Yeah, I think it was a 30-minute actually. Let me refresh and see what it was. I don't know, somewhere down here. Somewhere down here was my candle. Yeah, right here, guys. Okay. Right here. Okay, that was my entry when we broke that candle to the right. This thing ended up running up. And I knew that we would get a bounce off of this supply zone. I knew we would get a bounce off this supply zone. But my thinking on this was, when we bounce, we would recover and continue up. But the Aussie dollar ended up getting a little bit of lazy after the 25 basis point hike that they did have the other day. And I think part of that must have been from the PMI data that came out as well. Now, that came out over the weekend. It was more of a yellow folder event, so more of a light impact event. But that ended up kind of skewing the overall percentage of the Aussie dollar. As far as the strength, let me go find it real quick. Macro surprise index. Oh, okay. So the Aussie dollar coming into my trade was up in the 80 percentile. Okay, So it ended up dropping a little bit. You can see back here, okay, this purple line up top, we were just over 80%. To be exact, it was 83.33. Okay. So that just meant that 83% of the reports were exceeding expectations. So anyway, that would have been the first, I believe. 1, 2, 3, 4, 5. Yeah, the first when I got in that trade, guys. So at that time, the pound or the pound, I'm sorry, the Aussie dollar was, pretty strong. And the US dollar, let's see, it was down here. So just in the 50 range. It'd be this light blue line right here. Okay. So clear Aussie strength over the dollar strength. I got into that trade. And as soon as I did that, the very next day, it kind of dropped. And it dropped because of the PMI data. Okay. The PMI data on the previous report for the manufacturing sector had been a pretty good score. Okay. A pretty good result. But this one actually had missed. So that's out of my hands. Okay. I'm not Nostradamus. I don't know that the next day that report's going to go down. It just went down. And when it did that, the strength of the Aussie went from 83 down to what it is today. Okay. 83 down to 67. So just a little bit weaker. Still strong overall. So I didn't want to just close the trade. But anyway, as the course of the week kind of drug on, guys, you can see we bounced into that supply zone and we did not get the push away like I was looking for. And it finally rolled over. So I ended up taking a profit, a very modest profit, guys, under this demand zone that I told you guys I was watching. Because in the wake of pushing away from the demand zone I bought it from, it created this demand zone here. And it did get a slight bounce, a slight reaction up, but it just continued going. So it ended up stopping me out here. My stop loss started off down here, okay, but then I just moved it under there. So ultimately, I did leave quite a chunk of money on the table because at one point, obviously, price was up here. It was $1,100 unrealized at one point, but I think I finished with like 380. So that's just kind of the risk you run, with looking for the home runs. So it's tough sometimes, especially when you pull back on a lot of that unrealized profit. But at the end of the day, I didn't break my rules. I thought that the price would have been able to keep up. But when you have the PMI data come in and it's not a good look, it's not a good number, then things happen. Okay. It just made the currency a little bit weaker. So still strong, but not as strong as I was hoping it would remain over here on the surprise index, the eco surprise index. Okay. So anyway, yeah, still $380 is $380. I think I made 200 on the other account that I had, something like that, 180, something like that. So it was a green week overall until yesterday. I ended up yesterday getting yesterday midday. I had been watching this trade for a while. Well, I had been watching a few. So here's the thing. I had quite a few alerts that hit yesterday. And so I kept bouncing back and forth between tickers and, just trying to argue with myself. Hey, which one of these do I want to get into? Which one do I want to avoid? And so I settled on the New Zealand Swiss. Okay. So let's go take a look at New Zealand Swiss, because that's the other trade I got in yesterday. I mean, to start off, to start off, it was giving me a nice bullish score. I think it was a 9 yesterday. So there's kind of a common theme this week. What started off strong at the beginning of the week that I had my eyes on, all these currency pairs, or most of them, ended up going down in strength. Okay. Kiwi yen, Aussie yen, these guys were up in the 14s and the 15s, but as you see now, they've dropped to the 10 and a 9. A lot of these dropped anywhere from like 2 to 3 points. So they remain in bullish territory, but they just got a little bit weaker. Now, not all of them. CAD yen, I do believe, is one of them that started off the week at around a 5 or a 6 or something and ended up, increasing a couple points. But the point is, it's a very dynamic list. I don't want to say there's a little bit of luck involved in it, but there is a little bit of, who knows what the course of the week is going to bring. So you can't help it. You can't change the scoring on this. You can just use it as a guide. So anyway, what I say, Kiwi Swiss. That was the other trade I ended up getting into yesterday. And partially, and every time I do lose a trade, guys, I know exactly why. I usually know exactly why, because my gut knows, okay, you kind of skipped this, you overlooked that. Now you feel like a dummy, don't you? So I got into this trade yesterday. Let's see here. Where did I get in at? I do believe it was right here. I think I got in on a 30-minute. Yeah, there we go, guys. So I ended up getting in on this 30-minute zone right here. Okay. And as you see, we did have a nice bounce. It bounced up pretty nicely at one point, but then just completely turned around and rolled over and stopped me out for a small loss. Okay. But, you know, when it came to that demand zone, I mean, at the time, I liked it. You could see it was a larger 2-hour zone right here. So it was a little bit of zone confluence. Yeah, same thing with a 4-hour, but that's just too big of a zone. So that's why I kind of dropped it down to the 30-minute, just to kind of, you know, make my reward risk look a little bit better. Because at this point, I just had to take it, you know, clear up here to the tops, which would have made 5, 6, 7 to 1, whatever the case is. But anyway, yeah, it bounced. It got that first bounce like I liked, but then what happened? Well, you just never know how these things are going to work, but it ended up bouncing into a supply zone right there and rolled over. Okay. So that's basic. And not only that, but you guys see that blue dashed line. What does that mean? Well, it means I had a former resistance or a support line. And it just so happened it went back quite a ways. Okay. Yeah. You had that little high point kind of respected here. And then, yeah, it ultimately caught it on the inside of this supply zone. So, you know, a couple odds enhancers for the shorts did come to a specific spot, and right here's where it caught it and took it down. Now at this point on a 30-minute time frame, okay, it is a downtrend because it is lower lows, lower highs. But remember, I always look at things in the context of the higher time frame. So the 4-hour time frame, you see higher highs and higher lows, right? So I was expecting that to hold. It just didn't hold. It just decided to chew through. And this is where trades can get maddening, because you see it chewed through my zone, and it chewed through quite a bit. It came down lower, but now it completely reversed course. So this is what everybody goes through. Okay. This is just part of trading. You know, price going through, taking out your stop loss, and then going in the direction that your analysis thought it was going to take it anyway. So fun times, but it was a small loss. Okay. 0.2%. Not a big loss, not a big one. So it just leaves me slightly red on the week, not a whole lot. That's why I do have my lava lamp on red today, because I am in the red. Okay. But that's just the way the cookie crumbles sometimes. So that's a little recap of my week so far. It's kind of ironic because on my brand new account, I got into another trade, and I can't remember exactly which one it was, but I took a small loss on it as well. And that was with the new trading strategy that I'm trying out, that I'm playing around with. Okay. Where did my stuff go? Oh, there it is. So yeah, I ended up taking a small loss on it as well. Let's see here. It was the Swiss yen. Okay. I won't get too deep into the analysis on it, because that again is with my new strategy I'm kind of playing around with. But just one thing I will say is, at the end of the day, I just bought it way too high on the curve, right? I was looking at this on a much smaller time frame. Okay. We're sitting at, I don't know if this is all-time highs or not. Let's take a look. Yeah, all-time highs, guys. Swiss yen is at all-time highs. So I was playing around with it too high on the curve. Okay. Now, remember, this is a different set of rules. So I don't want to say I broke my rules, because this is a different set of rules I'm testing out. But, you know, I got to say, I felt pretty hesitant getting into it up here, because that is too dang high. If I'm looking at this swing high, if I'm looking at this swing low, this swing high, that's clearly high on the curve, right? So anyway, now after that, funny enough, I ended up finding a third opportunity. Okay. I'm trying to remember which alert it was. Oh yeah, it was these. So for in my opinion, I had one loss on one strategy. I had one loss on the brand new strategy. So that's two losses, right? Well, that's kind of my limit. Okay, that's a good limit to have. If you have a couple losses in a row, depending on what type of strategy. Now, if you're a scalp trader, then obviously you're probably trading 5 or 10 or 15, 20 trades a day, right? So I don't know how the numbers work. I got to be honest on that. Works a little different. You might lose two trades in the first 5 minutes. Okay, how do you work that? Do you just take a break, come back? But for me, with my swing strategy, good God, I can't talk. I will typically, if I have a couple small losses, I'll avoid trading the rest of the day and I'll just sit and watch. So anyway, had my two losses on the respective accounts. And then very shortly after that, I had two alerts go off for Aussie Yen and Aussie CAD, which were both on the bullish list. Okay. There's Aussie Yen at a 9, there's Aussie CAD at a 7. So Edgefinder's given me permission to place the trade. Should I find a spot? Well, I come in here and I was looking at both of these assets on a 1 hour chart. A 1 hour chart for Aussie CAD. And as you can see, low on the curve, demand zone. We had a 1 hour, and then I was more fixated on the smaller time frame within. So that would have been the 30-minute, where this candle here is. And then over here on the Aussie Yen, I was looking at it in the context of a 4 hour to start. 4 hour. Oh, by the way, right at the 61.8 fib retracement. And then I don't think I broke that one down a little deep. No, yeah, I just looked at that in the context of 04. I still had a gap on a 1 hour. I see that now. But anyway, I was a little gun shy. Okay. I was a little gun shy because I took two losing trades. I closed the profit out earlier in the morning, the one that I had been holding all week, but then I had two quick successive losses, okay, on two different strategies. So I felt a little gun shy, got to admit. Oh, and by the way, my excuse me. God, I cannot talk today. My weighted VWAP, good God, Tiger. Anchored VWAP, I'm sorry, my anchored VWAP also went through the demand zone. So look at this. I had a 4 hour demand zone right on the 61.8 line, and also VWAP. Okay. So a couple really nice odds enhancers right there. And I didn't place the trade. Okay. I did not place the trade. And see what happened afterwards. You see how trading likes to slap you upside the face sometimes? It went exactly how I thought it would. Okay. It caught the unfilled orders, drilling down to a 5-minute time frame. We got that let's see here. Yeah. Well, okay, you got this candle, and then you had a candle right after with a wick. And then you had increasing volume. Guys, I should have placed this trade because it passed all my rules. But because I had just had two quick losses shortly before, I was gun shy. Okay. This will happen to you. This will happen. Because then I start overanalyzing. Like, okay, what could possibly go wrong with this? Well, short-term downtrend, which I need. I have to have a short-term downtrend, a small time frame downtrend to come into my zone so I can buy it, right? So, yeah, I knew that. What else was I looking at? Well, I was looking at this little candle here, possible supply zone that could affect price. So then I start going in here doing this. Okay, draw up my supply zone. What happens if we bounce into it? Okay, if we bounce into it, will it chew through it? Will it not? So then I start thinking, okay, if price is up in this area here, we did create a new 10-minute demand zone. Right here, okay, where it hit the demand zone to begin with, the higher time frame zone I was looking at. So do I look to wait for this price to slingshot it back down into the zone and buy it then? That was one possibility I was looking at. In other words, a second chance. You guys have probably heard me talk about second chance entries before. It's where you miss the initial zone bounce, but then you look for a new zone in its wake. Also called the confirmation entry, right? Price comes down, breaks a structure. The new structure forms the impulse leg, and then you look for the new demand zone within. This is a perfect example of that. This is ultimately what I decided to wait on. Because after I saw this, after I saw the bounce and it on a 5-minute time frame, it broke through the supply zone, okay, that green candle before the big drop. See, it broke up here. I was a little bit skittish because, yes, it broke it, but it didn't really close too high above it. But nevertheless, it chewed through the supply. So that told me that this demand zone had strength. Okay. Closed up here. So at this point, I had an alert set. Actually, I had it down here. Okay. I had my alert set above this 10-minute demand. And the trading gods, okay, because the trading gods are always watching us. It ended up giving me the pullback, but just missed my entry, my second chance entry by about 2 pips, 3 pips, 3 points. Okay. Very tiny amount. You want to talk, and then it proceeds to obviously shoot to the moon. Right? You want to talk about maddening after you have a couple losses, couple small losses, and then you miss an entry like that. Because I was hyper aware at this point. I'm like, okay, get over it, Tiger. You had a couple losses. But you got to stick with it, right? But my rules also say if I have a couple losses in a row, then that must clearly mean maybe I don't have my finger on the pulse of the market. So I stepped away. I still watched, but I stepped away. I just ignored the trade. So it's just ironic. Okay. This is stuff that everybody will go through. You'll have a couple, 3 losses in a row. You'll get gun shy even when all your rules pass on the next one. And perhaps you don't take the trade and then it proceeds to run on you. So that's trading, right? That's the annoying part about trading. I've been in trading for 12 years now. It still sucks. Okay. I was upset yesterday, especially this morning when I saw that it kept going. Okay. That's annoying. That's upsetting, but hey, that's trading. That's the industry we signed up for, right? The only thing we can do is laugh about it and not let it get to us. Okay. So that was Aussie yen, and and then let's go look at Aussie CAD because this was the other one I was looking at. Okay. Started off low on the curve. I mean, I this was super annoying because this met every single one of my rules. Okay. And obviously the whole time I'm arguing between the two. Do I want to go with the Aussie yen? Do I want to go with the Aussie CAD? So I basically overwhelmed myself because I had too many options. And I had 2 or 3 other alerts from 2 or 3 other assets going off. But I knew that these were the 2 that looked the best. Okay. When I combined the fact that of the size of the bullish score that they were given and the positioning, meaning low on the curve, I knew these were the 2 best options. But this is the exact same thing, guys. Exact same thing as what happened to me on Aussie yen. Price came down, bounced into the demand zone, had a confluence, okay, a smaller time frame confluence. And this was what I was waiting on. I was absolutely waiting on the 30-minute candle on this one. Okay, volume increase after that, low on the curve. And then look how absolutely beautiful these swing lows were over here. Okay. That's an easy stop loss placement had I gotten into the trade. Okay. Just simply put a stop loss down here under all this, just like that. Because now you're incorporating all these lows. Right? That's exactly where the stop loss would have went. But let's see here. 30-minute. Yeah, 30 minutes. Look at this 30-minute candle down here after it touched. You want to talk about pretty? I mean, there is no excuse as to why I should not have bought this green candle as soon as it broke. Okay. No, none. But I start having head games going on because I'm like, okay, well, I do have some strong bearish wicks just ahead of it. So perhaps I should see what happens. Can we break that and then get a retracement for a second chance entry, which was the same thing as I just showed you on Aussie yen. Okay. I was expecting this thing to roll over, and you see I still have my alert set to come down to here to buy it. But it was too strong. So this is the risk. I don't want to say risk because this is the conundrum you face when you wait for a confirmation entry. Okay. You might have price break that structure and then just keep running, right? So, but a lot of times it will retrace and give you a better price, right? So that you're not having to pay an expensive breakout prices. So basically everything that went, wrong at the same time on two assets in a row just basically went wrong. So I missed out on an awesome trade. Now I would have probably just went with one of these because, as always, guys, I don't really like doubling up the risk on any one currency. So in this case, the Australia dollar, right? I would have still probably just stuck with one, but yeah, it just, a lot of things just hit all at once. Like I said, I had like 5 or 6 other alerts going off. And it took me some time to go through and decide, okay, which one do I want? Well, when I have a lot of alerts hit at once, obviously I boil it down to, well, which one's giving me the stronger score over here on the edge finder? Okay. So Aussie yen, but then I had half of these bullish assets. I had half of them hit my alerts at the same time. So what's the lesson out of that? What's a good lesson to be learned out of that? Well, perhaps I shouldn't have had so damn many alerts on, right? Perhaps. I don't know. It's just a thought. I should have, because, when you got 5 or 6 alerts going off at the exact, now it doesn't happen that often, guys. Okay. Normally when I have alerts go off, they're spaced out, but this time it got me because I had literally 5 alerts go off within a span of like 10 minutes. And every time it goes off, I have to switch to it immediately so I remember it. And then I forgot where I was at. So it was just kind of a paralysis analysis moment. But if I can give myself a little grace knowing that, hey, I didn't jump into a trade out of haste. Had a lot going on. And, the last thing I wanted to do was just jump into a trade when I didn't feel 100% about any of them. So I saw my rules were being passed. But, hey, I let the 2 previous losses I had just had within that last hour get to me. So there's your transparency moment of the day. Okay. Veteran traders, we go through the same things. So my lesson for myself is perhaps I will limit my alerts to maybe one or two pairs with the same currency that are the closest to the zones that I'm interested in. In other words, if I go over here to whichever, okay, let's say, and you guys see I've got an alert here, right down here. Let's say on Aussie CAD, let's say I'm more interested in a zone up here. Okay, I'm just picking, this is just example sake. Okay, let's just say I've got something like that. Well, maybe I won't set this alert down here on this one. Maybe I'll just worry more about the Aussie CAD because there's a zone up here. Okay, it's closer to price, in other words. That way, something crazy doesn't happen like yesterday. And, price just hits a whole bunch of alerts at once. So I think that's probably something I'm going to do. I'm going to test this out. I'm going to play around with it. But I love alerts, guys. I absolutely love alerts. Okay, you see right here. Here's all my alerts I've got set. Okay, so I keep quite a bit of alerts. And then I usually kind of close them out, recycle them, on Sundays. That way I can come into a fresh week. Sometimes I'll set an alert out a couple weeks, just something that I think is really nice and strong. But yeah, it was just a weird afternoon yesterday. So anyway, there's my openness to you. Okay, we veterans, we go through it too sometimes, and then you miss out. Okay, so anyway, but at the end of the day, when all the dust settles, I'm only a few $100 in the hole this week. Okay, just a few. And I remember I got a 250K account, I got a 100K account, so I got 350K between my accounts, my challenge accounts. So break even, pretty much break even. But still annoying nevertheless. But it's not going to affect my Friday. Hey, ladies and gentlemen, by the way, I will be on Trader Nick's show today. So I will be ending the show just a little bit early today, just so that I can prep for that. So as always, guys, if you want, as always, guys, if you go to a1trading.com, you can just click up here at top right. You'll see the A1 live stream, and it'll show the schedule here. So there you can see me right there. Now that's 8 a.m. my time, 8 a.m. Central. So this is New York City time up here. Well, it's Atlanta time because that's where A1 Trading is based. Okay, they're based in Atlanta, Georgia. So Eastern Standard Time, all the same. So basically, right at 1 hour from now, I'll be on the show. So I'm going to probably just hang out on here for probably another 30 minutes. So if you guys have anything for me, let me know. I'm going to be starting full-time with these guys next week. When I say full-time, I just mean I'll be doing a 30-minute skit every day. Okay. So, yeah, I talked to Trader Nick about that the other day. He asked me if I wanted to, excuse me. He asked me if I could appear on their daily. So I said, yeah, absolutely. Let's do it. So I'll be helping him out, helping the guys out. But yeah, as always, just stay tuned. Stay tuned to this a1trading.com live stream, and you can find out what times I'm on, which days, et cetera, et cetera. And they usually I do believe they update right here with the live stream each day. I think I could be wrong about that, but either way, all you gotta do is just click over here, right over here on YouTube, and it should go right straight to their page. Well, I should say this, guys. It's specifically going to go to A1 Trading, which is the company. Now they have the live streams over here as well. Okay. But what I will say is if you save that, subscribe to this channel too, but also subscribe to Trader Nick. Okay. You can watch the live stream on either one. Doesn't matter which one. But over here, you tend to have more people, right? This is where everybody kind of flocks to. They kind of flock to this one. And this is where you have the bigger, more robust discussion in the chat. Okay. So I just wanted to point that out. But yeah, I'll be on there today. I'll be on there daily starting again on Monday. And yeah, so I'll be, I don't know the times yet. I need to talk to him. I don't know if it's going to be a set time each day or if it's going to be different times each day. So, if that's the case, perhaps I'll change my stream up to just 1 hour, just so I have time to prep in between. But yeah, just stay tuned to that. I still want to keep this slot because I still like hopping on early in the morning and seeing what's going on in the market. So anyway, that's a little bit about that. Let's check out a few of these. So the damage is done yesterday. Okay, I've got these I've got these ones I missed out on. Is there a possible trade to be had on them now? So now that we have hit these demand zones and we've bounced up, at this point, we're starting to break some structures, some higher time frame structures. Hey, we broke this little bit of these wicks right here, closed above them. So I would say this is kind of a new impulse leg. Hey, we've broken these structures. It looks a lot better when you drop it down to like a 30-minute. Okay, these are more prevalent swing highs now. So drop, base, drop, right? Drop, base, drop. We broke the base. So now is there a trade to be had in here? Because remember, Aussie yen is still a very bullish score of 9. And so is New Zealand yen, by the way. We're going to take a look at both of these. So I would still like to find possibly something. But remember, your probabilities are never going to be as good as when price rounds the corner off of a demand zone the first time. As price goes up like this, just think of it this way. As price goes up, the probabilities of you buying into a dip and and looking for a rise, the probabilities decrease. Okay. And that's why I like getting in at demand zones, because that's going to be your best reward to risk ratio that you could possibly get. So I don't want to be buying up here. It's too expensive and it's high on the curve. It's high up on this impulse leg, right? Not only that, let's take a look at the left. Looks to me like I'm bouncing into a supply zone as we speak. See that? So what do I expect? Well, I definitely expect at least, okay, it wouldn't surprise me if we got a little bit of a drop from here. Can this drop us down into a lower on the curve demand zone? Well, looks like I got a couple opportunities. Okay. There is one here. There is a demand. But there's another one below that has an inefficient market, and that's right here. This is our gap, is it not? So basically, I would look at this. This is how I would look at this now. I'd look at that whole red candle right there. See our red candle? That's the same. Well, that's basically the one where I missed out the first time. Can we get a retracement there? Can we get a push away from there? And I kind of feel good about possibly trading off of this candle, because you guys have heard me say I prefer zones that create themselves. Well, at first, you could say that this demand zone created it, right? But it did go deeper. So it went below that. Now, higher time frame, I don't know. Let's go to a 4-hour. Did that create? Okay. So let's see here. We could make an argument that price ended up dropping into this demand zone here, right? Did it touch it, or did it miss it by a pip? Let's do this. Okay, yeah, so it clearly dropped in. So yeah, we're going to ixnay that idea. Why? Because this demand zone is what caused the bounce. So I don't know that I want a retracement all the way back and try to trade from there. I might see if I can get into something a little higher. So perhaps this demand zone that I drew up already. Yeah, we're going to do that. We're going to do that. So I'm going to put an alert. Now, that's only if we break through this supply zone, because my goal is for price to continue and close above this supply zone. If it can do that, then that shows me there's some strength down here somewhere. So let's do this. So I've got an alert here, because I am still interested at the origin of this overall strong move up. Just a little hesitant because it was created from bouncing into a previous 4-hour demand zone. So I'm going to keep some interest in it, but for the time being, I want to see what happens if and when price returns to this demand zone. Now it's a little narrow. Okay, it's not the tallest zone, but it is a zone nevertheless. So that's going to be my strongest, one of my very bullish assets. That's going to be a retracement that I might possibly have some interest in. Okay. But if it does not close above this supply zone, it's going to drop my interest in it a little bit. Okay. I would like to see a close up here and then a retracement. And then this is a confirmation entry all day long. Okay. It can run off and leave me, and that's okay. I do not want to break my rules on this, because it is not the first demand zone closest to the origin of this overall strong move up. Remember, we have a gap right here. That's a fair value gap. Okay. So, but the cool thing is that VWAP, that anchored VWAP, that red line that's kind of floating across and up slightly, that's still there. So I still don't want to ignore that. Yes, I am a little bit cautious because that demand zone formed as a result of bouncing off a demand zone, but that's a -1. I've got a few other odds enhancers that might be able to, overcome that. So I do want to see what happens up here first. Okay. And we'll look for our basic confirmation entry. And I think I drew up a pretty nice picture of it the other day. Somewhere over here. Was it New Zealand dollar? I think it was one of the New Zealand pairs. Let me go look. Do. It was one of these pairs. Let's see. Where did I draw that? I figure I'll keep this drawing up whenever I find it. Just for a reference. Come on. Where did I put that? Where did I put it? Where did I put it? I can't find it. I can't remember where I put it. But either way, break a structure to the upside. Excuse me. Oh, Lord. I thought it was one of my Kiwi pairs. I forgot where I put it. Oh, well. Don't worry about it. Anyway, so that's Aussie yen. Aussie yen. Now let's go look at Kiwi yen because that's our other very bullish asset. Kiwi yen. Here we go. All right. What have we got for Kiwi yen? This is our number one asset, guys, at the moment. Remember, this is a dynamic list. This 10 could drop to an 8 today. This 10 could raise up to an 11 or a 12 today. It's a very dynamic list. I like to constantly, at least every half hour, just take a quick peek and see if anything changed. So anyway, daily chart here, got a nice big wick underneath this current daily candle. That means we've had a strong rejection. I just missed my alert. Yeah, it's just been a crazy I would say 16, 18 hours. Look at that. Look at that. This was a 30-minute zone. I do remember this one. No, it was a 15. Look at that. Look at that. Look how close we missed it. Go look at this. It just zoomed into a 15. That's a pretty one. Pretty demand zone. That's the one I was going for. But you guys know me. I'm a cheap ass, so I try to find the best discounts I possibly can. I didn't like looking at this in the context of any higher time frames because like here on a 30, okay, you can see the top of the wick touched the bottom of the wick 2 candles over. So that to me is an efficient market. So I can't, because of my rules, use that as a, I cannot use the full range of that candle as a potential entry. That's why I dropped it down to the 15 because we had a gap. Okay. Top of the base candle, bottom of the second candle. There's our fair value gap. Here's our gap right here, showing strength. So that's why I was waiting explicitly on the proximal line of the 15-minute demand zone candle. Okay. But as you can see, just like a few of these assets, this one missed it by 10 pips, 8 or 10 pips. And Kiwi yen moves pretty decent too. Let me see how many pips a day. What's the ATR? Average true range is 93.5 pips. So that's the average range of the daily candles. Okay. So in the grand scheme of things, that it's not like it missed it by much. Get my throat cleared up. Anybody in the chat? Tell me something in the chat. Tell me a lie. Tell me anything. What are you guys chasing today? Hey, before I get out of here, which, by the way, I'll be on for another 15 minutes, I do want to take a look at the put-to-call ratio. But first, let's just take a quick look at the currency since I'm here. So Kiwi dollar is currently the strongest currency when it comes to the fundamental analysis, one of the big ones. Okay, I think fundamental analysis supersedes technical analysis by a long shot. Okay, right behind fundamental analysis is our sentiment analysis, the relationship between smart money and dumb money. Okay, so when we're looking at, in my opinion, and I know Trader Nick can vouch for me on this because he talks about it all the time as well. The most important thing being the fundamentals. Okay, this is the most important part of it. Hey, which currencies are showing strength? Which currencies are showing weakness? Very simple, very well, I don't want to say easy, but very simple trading plan to start with from a 30,000 foot view is what's the strongest and what's the weakest. So the strongest being the Kiwi, the weakest being the Swissy. Okay. New Zealand Swiss for a potential long. And there it is on our list, okay, giving us a +7. So let's take a look at that one. New Zealand Swiss. Okay, we broke some structures up here. Go ahead and delete that. That's an old news zone there. Let's go to a daily. Reset my chart. All right, so just from the very first thing I see when I look at this zoom out from a 30,000 foot view is the fact that we did bounce into a supply zone on a daily chart. Okay, we wicked in right here. So when I see that, then I definitely want to wait for the swing low on that same time frame. And we got that. Okay, price dropped all the way down to this swing low down here. So this is the swing low, and this is the swing high of this impulse leg. Okay, so it does make me a little hesitant because we did hit the higher time frame zone, but just means I might not bet a full risk. So I have an alert set, and this one's at the beginning. So you see the green, you see my green box. So that's smaller 1 hour, but just like some of these other pairs, guys, look, it missed my alert by 5 pips, by 4 pips. What's up, Mr. Peeps? Hey, no worries, buddy. I'm going to be off of here in about 10, 12 minutes anyway today. I got to get off early because I am appearing over here on Trader Nick's live stream at 9 a.m. Eastern Standard Time. Okay. So I just wanted to let you know that. As always, you can just go to a1trading.com. At the top, you see live streams, A1 live stream. Just click there. And yeah, just that'll show the schedule every day. And I'll just start next week. I'll be on here every day on Trader Nick's. I don't know the times yet, but yeah, I just wanted to let you know that. So anyway, guys, to finish up my last 12 minutes or so here, yeah, we'll take a quick look. So yeah, so that's kind of the common theme, guys, among all these. I'll probably talk about it a little bit more on Trader Nick's stream, but yeah, had a lot of alerts that just missed, just like this, guys, by like 4, 5, 10 pips. So that's nothing I can do about it. I don't want to be chasing price up here. I still want to be waiting for retracements. So just like the other pair, the current Aussie and New Zealand pairs we looked at, this one's broken a couple structures. So perhaps we just wait for retracement all back. Okay, possibly. Obviously, you got a demand zone down here. And we've got and by the way, that one's going through a former resistance support line, that blue dash line. So I am going to set an alert here on this potential full retracement. May not hit today. Kiwi Swiss is one of the slower moving currency pairs. Okay, when we're talking ATR. So this one's probably more a next week type of thing. What about one of these spots here in the middle? Is that a possibility? Well, let's go look at a smaller time frame. Here's a 30-minute. I don't like how this wick dropped deeper than this candle here. Yeah. Let's go look at a 15. Turn on my moving average for a second. Yeah, nah. Probably just wait for a retracement. There is a nice 15-minute demand zone inside of this 1 hour right here, that red candle. So that's a little bit of confluence. I'm just going to put a white line above it. Yeah, that's actually a pretty nice looking spot because it's also going through that former support or resistance line. So that might be a potential play. But, a lot of these Kiwi and Aussie pairs, they're just going to have to retrace. I may not have a chance. We'll see. We'll see what happens. Nick does know his stuff, Mr. Peeps. He does. Smart dude. He's way smarter than me on the fundamental side of things. But I'm trying to catch up. He's pretty whippy. He's pretty witty when it comes to the relationships of all these currencies and commodities and everything. I'm getting there, but I'm not quite to his level. He's spent a lot more time than me on all the relationships between the fundamental analysis, the CPI, the inflation, the growth numbers, the employment numbers. I'm catching up, but no, he's still got me in that avenue, and I respect him. So that's why I watch his videos every single day. Okay. It's always good to find a mentor. Doesn't matter if they're younger than you, older than you. He's definitely younger than me, probably 10 years younger or so. But yeah, you got to follow where you're at, no matter how young or old they are. So yeah, I love learning from him. I learn at least one nugget every single day. Just get 1% better, guys. That's the common theme. Yeah, it just so happened I spent my decade plus more so on the technical analysis, the charts, fine tuning supply and demand zones. It's ironic that now that I look back on it, I see that I spent the most time on there's 3 analysis groups, okay? Fundamental, sentiment, technical. But it's kind of funny me looking back now and seeing that I spent the bulk of my time studying the analysis group, that I see now is the least important. Because remember, the fundamentals is what they're talking about online, on TV, on CNBC and all these stations, Bloomberg. Okay, they're always talking about this stuff. They're not talking about 5-minute time frames. I just cannot get my head around fundamentals, but I can't commit full time to trading. So it is nice that you round it all up for me. So yeah, absolutely. I love this stuff. Look, I'm starting to turn into an absolute nerd, just like Nick, when it comes to this stuff. And he's a self-professed nerd, so I don't say that to pick on him. It's just in playful fun. But yeah, with having this edge finder, man, it just simplifies everything. I used to pay attention. I used to watch on. I would always do this every day, even though I wasn't as in depth into the fundamentals. I would still always look at the Forex factory, the high impact events in front of me for the day. But then here was my challenge, guys. Like right now, we got Canada's employment numbers coming up. We got the UOM sentiment coming out for the dollar later. I would look at these numbers today, but then what would happen? I'd forget all about them when we come into Monday. Okay, nothing on Monday. Tuesday, okay, on this coming Tuesday, we got retail sales numbers. Well, I would then shift my focus to, well, this is the most important thing in front of me, and totally forget about the Canada employment numbers that we're having today, as well as the University of Michigan consumer sentiment. So I would only focus on that, which is fine if you're a scalp trader, but I'm not a scalp trader. I'm a short-term swing trader. So I'm in trades 1 or 2 days up to 4 days. I need to look at stuff in succession. So when you do that, you get a clearer picture. Because what is a good trade today, by the time the next day's high impact events come out and then the day after, it's going to shift things. So that is the biggest thing that I figured out with the edge finder. Okay, is keeping an eye on every one of these things, every one of these items, the economic, inflation, employment numbers, interest rates, all that, as an aggregate, as a whole. Because it's just like the COT report. It's just like the retail sentiment. Any one item by itself is not the end all be all. You have to look at it as a whole. And it's just like the edge finder, when it comes to edge finder, and when it comes to the stock box, okay, for the stock traders out there, he's got this as well. This is just the most brilliant thing I've ever seen. And I've been in the, again, I've been trading for 12 years and I've done a ton of research. Hell, look at my trading folder, guys. Look at this. These are all resources that I've accumulated over the years, links, websites. Now there's some prop firms on there as well, but I mean, this is just an exhaustive list of resources that I've just kind of followed and saved over the years. Okay. But especially when it comes to figuring out which direction a currency pair wants to go, or gold or silver, I would have to go through a lot of these things. Okay? CME Fed Watch, know the float, Forex retail sentiment. Look at that. I think. So this is actually, it's funny. This is actually oops, I didn't mean to do that. This is actually the link I had from when I used to just pay attention to Trader Nick's retail sentiment. I still have it saved. I used to go on this every day just to see what the retail sentiment looked like, thinking this was the end all be all. But look, when you look at the Edge Finder, crowd sentiment is just one item. So I was basically ignoring every one of these. Okay, seasonality, moving average crossovers is kind of how he does the trend analysis here. But I was ignoring all this crap. Now I would look at the day's report. So again, Canada's employment numbers are coming out today. Okay, I would pay attention to today, but you know, if this were the US, this was coming out today. That's just one of these boxes, and just completely ignoring everything else. I was doing that, wondering why the hell my supply and demand zones weren't working out. I knew they worked. I knew they worked because of the instructors that taught me worked on the floor of the Chicago Mercantile Exchange. He explained exactly how supply and demand works because he physically had the orders in his hands. He'd have his buy orders in his left hand. He'd have his sell orders in his right hand. And all he did all day long was just mixed and matched. And he could see the physical orders. So if you could see the physical orders, I think that you probably know what you're doing, because he knew exactly where prices would turn based off the orders he had in his hand. Now, all that's done electronically now, but you know, back in the day, it was physical. So I totally got it. I totally understood it. I knew the basics. All right. It took me a decade plus, pretty close to a decade to figure out all the nuances. So in other words, the odds enhancers, what perfect combination of potential odds, oscillators, RSI, volume spread analysis, kind of the algorithm within. It took me a while to figure that part out, but I understood the basics from the very start. Okay, the relationship between supply and demand, gaps, okay, gap strength, all this stuff. But it wasn't until I pieced together all this and have a nice visual to clarify, because I would still go through all these reports, just kind of studying them up, but I would spend 2 hours a day trying to piece together everything. This easily has saved me 2 hours a day. And probably even more throughout the course of the day as things update. It's a dynamic world that we live in. It's a dynamic world, the finance market, when we're talking about all the economic indicators. So anyway, that's a lot. It just simplifies it. So anyway, I'm about out of here in a minute, guys. One thing I did notice, Bitcoin. Oh yeah, that's what I wanted to show. The put to call ratio. We'll show this, and then I'll probably go ahead and hop up out of here for the day, guys. Just because, again, I got to get ready for that, and I got to do something else on my computer before I even hop on. Looking at the put to call ratio, okay, this is SPX. Okay, we are in the high put volume territory, but I'm a little skittish on this. NASDAQ, okay, it's pretty well neutral. And then the Dow, yeah, it's pretty well neutral too. Which one was I looking at? Oh, Bitcoin. That's right. Look at Bitcoin, guys. It's just been a bloodbath lately, has it not? Has it not just been going straight down? But what's happening? The average retail trader out there is heavy on put volume, meaning bearish bets. They're all making bearish bets. So if they're all making bearish bets, guys, and if we look at that as a contrarian signal, could we not possibly see some bounces on things like Bitcoin and Ethereum? I don't know. But one thing I did notice is the fact that if we go to a monthly chart, price has bounced into the bigger rectangle. If I drop to a weekly chart, we have it's kind of hard to see here because I did bring up another zone. Okay, so this light colored orange. Here, let's get this out of my way. Anyway, there's a weekly demand, and if I go all the way down to a daily, and it just so happens this demand zone I had drawn up bounced right in. So think about this. I'll leave you with this. We had a monthly demand zone, which is the big rectangle. We had a weekly confluence inside of the monthly. And then we had a daily. We had 2 daily demand zones. I didn't know which one it was going to potentially bounce off of. It chewed right through the first one, but it caught a bid on the bottom. So that's a monthly, weekly, daily demand zone confluence. Could that potentially aid in giving us a boost upwards? We've got a neutral score on Bitcoin, so I don't have a good enough fundamental reason to buy it. But I just thought I'd leave you with this and see, could this high time frame, the highest of time frames, could these time frames potentially give price a boost back up? Coupled with the fact that on our put to call ratio, there are a ton of bearish bets in the options market as we speak on high put volume. Don't know. We shall see. We shall find out. If we come in on Monday and price is back up here somewhere, it won't surprise me at all. But I'm not going to put my money on it because the Edge Finder does not tell me so. So that'd be a cool little thing to see what happens when we come in on Monday. But I'm going to go ahead and hop up out of here early today, guys. Like I said, I've got Trader Nick's show here in 29 minutes. I got to do a couple things real quick to prep for it. I'll find out what my time, and my times may change daily. I don't know, but we'll find out, and I'll have some more info for you guys on probably on Monday on that. But yeah, come tune in at Trader Nick on YouTube, and I'll be on here in 28 minutes. So peace, guys. Talk to you later.